Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm talking to you from New York City on this, the 16th day of July, 2019. I do want to thank each of you for listening to this show, making it one of the more popular shows in the Voice America Business channel. Also want to invite you to keep your questions, comments, criticisms, and praises coming along to questions for Taylor at gmail.com. Questions, the number for Taylor at gmail.com. We do want to thank our sponsors, otherwise we wouldn't be here. Klondike Gold, Noble Resources, Radisson Mining, and Great Bear Resources. I wrote in my newsletter this past week that over the past 40 years since I've been following junior mining companies, I have seldom been as excited about the prospects of the junior miners as I am now. Not only does the industry now seem to have some wind at its back in the form of higher gold prices, but many of the companies I'm following in my letter have had phenomenal exploration success and discoveries that have been made as a result. Let me give you a couple of examples of those. Just this morning, Great Bear Resources, which has shown signs of being on to not just one, but possibly two major gold discoveries in the Red Lake District of Ontario, announced the discovery of a new high-grade gold zone, which is 1.4 kilometers along strike along the LP fault from the recently discovered Bear Rimini zone, which appears to be geologically similar to the famous high-grade Hemlo discovery in Ontario and the very rich Fosterville gold mine owned by Kirkland Lake, which is their leading project. This morning, the stock shot up by some 13% on that news, but the magnitude of prospective structure yet to be drilled is so amazingly large that this massive, I think there's just massive blue sky potential that remains for this stock. And Chris Taylor, the CEO of the company, is scheduled to be on this show on August 6th. I don't think you're going to want to miss that if you're interested in this, investing in this sector. On Monday, July 15th, Radisson Mining Resources, is another sponsor to this show, announced a very significant increase in the grade of its resource at its O'Brien mine. The grade was increased almost double to 9.48 grams per ton. And as Hubert Parent-Bouchard explained in his recent appearance on the show, a new understanding of the location of high-grade gold mineralization in the structure is what is resulting to a higher-grade resource. The stock moved a bit higher yesterday on the news, but it's fallen back some today. As I've told my subscribers, given the presence of numerous hungry mills near this deposit, I think this stock provides an excellent upside potential from its current price, which was a mere 11 cents this morning. That's in U.S. money. Now, understanding the geological controls is very important for Radisson. It's also a concept that is helping Peter Tauman lead the exploration efforts of the gold of that company's mother lode target, the Great Klondike Placer gold mines in the Yukon. Well, they're on to some really high-grade structures now, or at least Peter believes they've figured out where those structures are. And Peter will be with me on a little while from now to talk about the plans and what's going on this summer in their drill program. Very exciting. Also, the massive scale of this thing, 55 kilometers long. The targets are absolutely huge, and I think that we're going to have a lot of excitement from that company as well. And then I want to mention the name of another company that I cover in my newsletter. They don't happen to be sponsors at this point in time, but I'm talking about Brixton Metals. Yesterday they reported a 554 millimeter drill intercept that graded nearly 2 grams of gold equivalent. And that was on its Thorn project in northwestern BC, and the stock rose by 50% since yesterday. These are just a couple of examples that I am following right now. Really exciting, and when the wind is at our backs in the gold sector, these companies can raise capital to put holes in the ground, and with those exploration efforts, that's when some really exciting things start to happen, when massive amounts of wealth is discovered in the ground. Now, to be clear, investing in junior exploration stocks is a high-risk, high-reward game. But in a gold bull market, as I say, when there's wind at our backs and companies can raise the money, a portfolio of these kinds of stocks can be extremely rewarding. So I would suggest that if you have some speculative capital available that you can afford to put into this sector, you may want to consider subscribing to my newsletter and go to miningstocks.com to sign up for Jay Taylor's Gold, Energy, and Tech Stocks. I've titled today's show, Preserving Wealth After the Next Financial Crisis. And as I just mentioned, Peter Talman, well, he'll be with me after the first commercial break to talk about Klondike Gold and the exploration efforts there. Michael Oliver will be with me in just a minute. Preserving Wealth After the Next Financial Crisis, as I say, that is the topic to be discussed with James Rickards during the second half of today's show. This is a topic of his most recent book titled Aftermath, 7 Secrets of Wealth Preservation in the Coming Chaos. So I want to ask James Rickards to explain why he is predicting chaos, the nature of it, and perhaps give us some ideas about how we can do the best to turn hard times into good times. But right now, to help us turn hard times into good times, Michael Oliver is with me. Thanks for joining me again, Michael.
Hi, Jay.
Yes, it's so good to have you. Always so good to have you, Michael. Our listeners really love to hear from you. And I should tell those who aren't availing themselves to what Michael can offer, it's olivermsa.com, olivermsa.com. Michael, this morning I received an email from goldsilver.com with a headline titled, Everyone Hates Silver, and that's the best reason to buy it now. Obviously, this is a promotional advertisement from Gold Money, or from an outfit called Gold Silver. So they have a vested interest in getting people to buy their silver products. But to give our listeners an objective view on silver, what are your thoughts about poor man's gold?
Well, it's ready to explode, I think. Over the last several years, after the first rally that occurred in 2016, post the bear market lows, gold exploded, silver exploded a lot more. But then in the couple years since mid-2016 peak, silver eroded all the way back down to its low. It held it in the mid-13 area. And since the low in August of last year in gold, which was 1160 area, it's gone up over, 1440 high, thereabouts, and we're trading above 1400 now. Silver has not recovered as much as gold has off of its low. It's trading right now in the upper $15 area. Its rally high of the recent, early this year was at 1620 in January and in February. So we're below that high, whereas gold is, above those highs. And so you continue to look at silver on the price charts, and it says, gee, what a dog. It just can't keep up with gold. It can't outpace gold. Well, we think it will, because our momentum studies of silver going back several years show a structure not far overhead, not far above today's highs, that if you engage it and break out on the momentum charts, which is not evident when you look at a price chart, you can't see the breakout structures. It is so massive, wide, and horizontal structure on the quarterly momentum of silver that we think once we get up through our numbers, we could see silver shoot into the 20-plus area rapidly. I mean, within weeks or a month or so. It's a massive structure, and it's like a tinderbox. In other words, when you see something like this on the momentum chart, you wake up and say, "This is upside crash situation." Anyway, so we think silver now. If you look just the last 5 days, gold has been toiling between 1400 and 1420, back and forth, back and forth, back and forth. Silver shot straight up. It's gone from 15.15 traded today up to above 15.60. I think the settlement today is going to be 15.60 on the spot contract. So silver for the last handful of days has suddenly grown a backbone. It's behaving now like GDX has behaved over the last couple months, which is vertical. So there's another example of a gold-related investment, the gold miners, that was acting like anemic for quite a period of time, and not reflective of gold's strengths. And then suddenly it came to life. And I think what happened is what we expected. We said that when gold goes through the silly price chart structure, the breakout level that everybody can see, namely at 1350, 1360 level, that outside investment capital will begin to flow into the gold market and related areas. Since a lot of asset managers around the world, let's call them non-gold bug asset managers, when they decide that gold is awakened and they need to participate, quite a few of them aren't going to participate in the bullion or in the futures. They're going to go to the miners, and that is evident in the tone and structure of what the gold miners have done over the last few months. Expect that from silver, especially if we trigger our numbers, which, like I said, we've specified to our subscribers. They're not far above today's highs.
Yeah, I'm just looking at a few of the silver producers on my list, and I'm thinking, Michael, maybe it's time to add to the silver sector, maybe take some profits on some of the gold guys. But First Majestic, Silvercrest is another one that I really love. It's not producing yet, but really developing a good project. And then Avino Silver. Those are some that I'll be passing on to my subscribers. Michael, just with 2 minutes left, gold is looks like the paper guys have hammered it pretty hard today. What are your thoughts on gold at this moment?
Oh, I suspect the pullback we just had in gold, which is really, if you'll stand back and look at the price chart of gold, just run an August gold chart. Go back to April, okay? We came up out of the hole quickly in late May, and in June exploded. And once we made our highs in July, look at what's happened on the price chart. Stand back and look at it. Compare it to congestion or peaks that we've made over the last several years. There's no comparison. It's a tight fist of ink. It's not a spike. We got up here and we're staying up here. And it's a funny-looking price chart, but it says, I am here to stay. The bids seem tight under the market, and that's why it's holding this very little tight, now like 4-week wide congestion zone. So the tonal nature of gold has changed, and I think that we're probably going to look for the next corrective move downside in gold to come from the mid to upper 1500s. And that's not a top. That's just a place where we expect the next surge to carry.
Wow, that's a pretty good move from here.
Yeah, from here it's a nice percent. But meanwhile, I would expect silver and gold miners to vastly, percent-wise, beat that move in gold. Beat
gold bullion. Okay, great. Well, Michael, we'll have to leave it go at that. We're out of time already. I know I wanted to ask you about a bunch of other things, but hopefully we'll have you back next week to cover some of those markets.